Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and in this video we are going to look at the stock market outlook for the week of January 13th. This article gets updated each week. If you're wondering where it is, if you're watching the video, you can go to TradeThatSwing.com, go to Stock Market Analysis and Trades, and you'll see it there. And each week I just go through this same process. It's repetitive, but it keeps me in during good times, keeps me out during bad times. And what I like to emphasize during these is that it's not so much about prediction. What I'm doing is looking for conditions where it's generally easier to make money. And those are the conditions that I like trading in. If the conditions are not easy, then I tend to stay out. There are a couple watch lists you can check out. Best swing trading stocks watch list. There's a strong list, which has likely deteriorated in the last few weeks, or last couple weeks. And then there's also a weak stock list. These also have been updated recently. If you're looking for, we're in a bit of a dip. If you're looking for some longer term, higher quality stocks, you can check out some of these lists. Let's get into the price action. So the NASDAQ, I would still say this is an uptrend. We are in a correction. We have this multi-wave correction going on, but I kind of view the last swing low as this one here, and we're still above it. Whereas you can see the S&P, it didn't climb as much on that last wave, so that's kind of last swing low, we're right at it. So I view us as an inflection point on the S&P 500. If we continue lower from here, then that would be in a downtrend. The Russell 2000 is in a downtrend. The NYSE Composite in a downtrend. The Canadian index, the equivalent low on that one for like these points would have been here. So on that one, we're in a downtrend. Based on this kind of more obvious swing low, we're still in an uptrend. But yeah, obviously a very strong sell-off. This would make me very skeptical as well. Bitcoin, no trade zone here. We've been stuck here for a little while, and I mentioned a few times, this has to move up and hold above 100K, or it has to move down and on the bounce hold below 92. That's what I'm kind of waiting for. I'm not really interested in just trading the chop. Sure, you could trade the chop a little bit, trying to get in near the lows, maybe catch a false breakout. But yeah, if I'm looking for the bigger moves, I want to see a breakout and a hold outside of this choppiness. Let's look at the market health indicators. All poor, except for one which is neutral. So we have the S&P 500 chart up here. This is daily percentage movement, and higher volatility is characterized by downtrends tend to have higher daily volatility. Uptrends, lower daily volatility. So right now, we're higher. We had this really big drop of 2%. We didn't recover it. That's more bearish price action, bearish volatility, bearish movement. Last week we talked about a little glimmer of hope in that we had a slight bullish divergence on the advanced decline line. We had a longer term bearish divergence though. So this was maybe, this one had climbed above this swing high. So it, basically when we were coming in, there was the possibility that if it followed the ADL, we'd get back up to this swing high. So pretty small divergence. It wasn't giving a whole lot of hope, but it was giving a little bit. And we didn't quite get there. We almost got to that last high, and then we fell off again. And you can see from here, the advanced decline line is near these lows that occurred way back here. So that on the S&P 500, that's like this level. So ADL saying, hey, the S&P is probably a little weaker than what it's actually showing, or the underlying market because this is doing is based on the NYSE, which is a broader measure of stocks. So it's saying the broader measure of stocks is weak. The S&P is still holding up, but if this broader measure of stocks is weak, this could be heading lower. This is up volume divided by total volume. I'm only looking for extreme readings way up here or way down here. You can see we've been in the middle. Nothing there. This is at the percentage of stocks above their 50-day moving average. Only 16% of S&P 500 stocks are above their 50-day moving average. I say this every week. There's nothing magical about a 50-day moving average. It is a very crude measure of whether a stock is in an uptrend or not. Definitely not a perfect indicator of uptrends, but it does give us definitely an assessment. When only 16% of stocks are above their 50-day, not very many stocks are moving up. It's going to be harder to make money on the long side. 28% of all U.S. stocks are above their 50-day. Again, pretty weak. Generally, I find it much easier to make money when these are above 50%. More than 50% of stocks are above their 50-day. More than 50% of stocks are moving up. And yeah, it's going to be an easier time to make money. Sectors on the move. I don't really like anything here. Energy was a little bit stronger last week. But yeah, pretty much everything not doing so great. Over the last 3 months, we still have a couple that are up in positive territory. Could look at those, but they've been communication services up there near the top, but consumer cyclical is not so great over the last month. Not particularly great over the last week even. So, you could maybe look at those, but for the most part, it's kind of weak. Not looking at too much on the long side. Shorts are a possibility if you're looking at some of the weaker sectors as well. So what am I doing right now? Well, I'm just enjoying the volatility with short-term trading. No new swing trades, especially on the long side in stocks or Bitcoin until conditions improve. We didn't talk about gold because, yeah, I just don't like the price action in it. It's until we get improvement in those and we start seeing more bullish price action, then little reason to get long in them. So that's your outlook for this week. Have a great trading week out there.